if this happens, then I'm still on the fence of whether or not, I don't know, some people are saying it's early January, whatever it is. There's some date next year that the ETF happens. So they're going to announce, okay, Bitcoin ETF is approved. It starts trading on, maybe a week or two later. I don't know how quickly these things happen. And the price is going to go fucking bananas. It's going to go up so much because people think that all of a sudden, as soon as the ETF opens, there's going to be this rush of creations into all these people who wanted to buy Bitcoin for the last, over a decade, or all of a sudden, all rush into these ETFs, and then BlackRock and all these guys are going to be having these lift offers everywhere and buy all this Bitcoin. That's not going to happen.
Welcome back to Money 101. The increasing global consciousness about currency devaluation is driving substantial capital into Bitcoin and alternative cryptocurrencies. Over the past few decades, many individuals have witnessed diminishing real-term returns across various assets due to the ongoing depreciation of the dollar. Arthur Hayes, a seasoned figure in the crypto industry, who has amassed significant wealth in the space, recently discussed his conviction that a collapse in the existing financial system is imminent. He attributes this impending crisis to the continuous money printing by governments, leading to the devaluation of currencies on a global scale. Hayes is optimistic about cryptocurrencies emerging as beneficiaries in the face of this forthcoming financial transformation. Furthermore, he offers insights into the potential impact of the upcoming Bitcoin ETFs, suggesting a measured approach due to the likelihood of these events becoming sell-the-news situations.
Gates are closing to what a friend of mine, David Dredge at Convex Strategies, calls a shark world. Basically, this fake accounting construct that we have in the financial and economic world, where you follow all these rules and all these accounting rules and make up all these numbers and claim that you're making money. But in an economic sense, we deflate everything either by the Fed's balance sheet or global central banking balance sheets or the price of energy like hydrocarbons. Most people have lost money in real terms investing in just about every financial asset. And people are starting to recognize that. That's why crypto is up so much and the best performing asset since 2008, essentially when we had the global financial crisis. And the great thing about this particular episode of Fiat Debasement, and governments have been doing this even before Rome, which is printing fake money, handing it out as if it means something. And when you get into trouble, you just print more of it. We're not doing anything new. We have computers that do it now in ones and zeros, but it's literally the same thing. But for the first time ever, the people have a way out. We have Bitcoin. We have this new financial system which can run a whole, stocks, bonds, tokens, whatever you want to call it. We can run all this stuff on a decentralized network ourselves. So we can take our capital and move it out of TradFi and into DeFi, into Bitcoin, into Ethereum, into other different types of primitives and tokens and whatnot. So for the first time, we have an escape hatch. And now that people are recognizing that, oh shit, all this capital is just not going to sit there in the banking system and be ripe to be stolen from by governments who need to inflate away this debt, we have an exit. And so now it's time to convince people that things like a Bitcoin ETF in the West and whatever they're going to call it over in the Chinese financial system is the way to escape. But you're not really escaping, you're just giving your money to somebody else who's in the TradFi system. So that's sort of this push and pull that's going on right now. And obviously we're starting to see the price of Bitcoin react positively, since the FTX debacle in, November of last year. Bitcoin's went from 16,000 to, was it now 45,000, 45,000, whatever it is, right? And all the while, the banks are supposedly not printing, but they are printing money. If you actually look at how much money is going into the banking system or interest payments on government debt, it's very stimulative. And that's what Bitcoin is telling us. And now Bitcoin, and I guess tech stocks, about Magnificent Seven in the United States, and those tech stocks are on a tear because liquidity is there for the right type of thing. So I think that this is sort of, 2024 is going to set up to be the choppy period where it's time to accumulate before you get the blow off top in 2025 and 2027. That's really how I'm approaching the world right now. I think we're coming to a head this time because the Fed and other central banks, every single financial crisis, they've essentially started to inflate another bubble. The last bubble, and the most important, is the government bond markets, which have been inflated since COVID times. And now we're starting to see that break down. We're starting to see the correlation between stocks and bonds flip. where people are now starting to be concerned about, okay, well, how much money do all these large governments have to print in order to make good on these promises they made to the people that they control? And it doesn't make any sense. It's unsustainable at 360% debt to global GDP. You're at over 100%. The debt's growing faster than you can service it, unless we find some new energy miracle. It's mathematically going to fail. And the investing class is starting to realize that right now, because you've seen a 30-year U.S. Treasury bond is down 50% in price terms from August of 2020 until today. That's absolutely a bloodbath. And so as people start to contextualize that and realize that this 60-40 portfolio, risk parity, or all these things that they believed about the volatility of reducing and return enhancing aspects of government bonds doesn't work anymore in a new global environment that is inflationary and not US-led, then all this capital needs to find a new home. Obviously some people are going to choose gold, but there's a lot of people who are younger who are like, well, I don't believe in gold, but I believe in my smartphone and what I can do on the computer. This makes more sense to me, this being crypto. And so I think people need to think, what's your goal? Is my goal to buy a financial asset to make more fiat? Or is my goal to save in an hardened energy currency that's outside of the system and a different financial network? So choose one. If you want to trade and earn more fiat, great. A Bitcoin ETF is great, depending on where your capital is housed. Maybe you have a bunch of fiat that's sitting in a retirement account, or it's managed by somebody, and there's just no way for you to get that money out and buy physical Bitcoin. I get it. Cool. It's a trading vehicle. It is not a store of value. It is not a new financial system. You aren't escaping the system. You're just trying to earn more filthy pieces of fiat. Cool. Use the ETF. If you want to actually have financial freedom and a store of value that maintains its purchasing power and energy, it comes with its own financial system that is outside of TradFi, then you must buy Bitcoin, withdraw it from the exchange, and self-custody it in your own wallet. There are the only two choices, but you have to think about what you're trying to do. If this happens, then I'm still on the fence of whether or not, I don't know, some people are saying it's early January, or whatever it is. There's some date next year that the ETF happens. So they're going to announce, okay, Bitcoin ETF is approved. It starts trading on, maybe a week or two later. I don't know how quickly these things happen. And the price is going to go fucking bananas. It's going to go up so much because people think that all of a sudden, as soon as the ETF opens, there's going to be this rush of, creations into all these people who wanted to buy Bitcoin for the last, over a decade, or all of a sudden, all rush into these ETFs, and then BlackRock and all these guys are going to be having these lift offers everywhere and buy all this Bitcoin. That's not going to happen. Money was going to flow in, but it's not going to flow in to the extent that people expected to, initially at least. And so I think it's a buy the rumor, sell the fact kind of situation if you're a short-term trader. Over the long term, if we really are witnessing a mindset shift of the 60-40 portfolio, which is, I believe it's 60% equities, 40% bonds, whichever one it is. If that is really dead and investment managers start to believe that, and people are starting to be taught that in school and investment managers, then we're going to see trillions and trillions of dollars worth of bonds that are no longer going to be owned. That money is going to flow into crypto, and it'll be flow into one of these ETFs, because as an investment manager, again, you're trying to earn more fiat, not trying to support a new financial system. So you're going to use one of these derivatives to get your exposure. So I am a pseudo ETH maxi. My thesis is the Ethereum network has the most amount of developer talent and energy surrounding it. It has a very large market cap compared to other layer one decentralized blockchains, decentralized compute blockchains. And I think that moat is insurmountable from others, because whatever others do, they say, oh, there's this one part of what Ethereum does. I can do it better, faster, whatever it is. I'm going to launch a new chain. And, investors who've gotten in early have done very, very well, but on the first run up. But can these networks actually deliver and get as many people as possible to build on their chain versus Ethereum? Which is different than saying there is a Uniswap or a DEX on ETH, constant product EMM on ETH. I'm just going to launch one on Solana, on Say, on Avalanche, on pick your fucking layer one blockchain. I'm just going to copy and paste what I originally did on Ethereum. Now, that doesn't mean that there's not going to be some original primitives developed on these other chains, but as of right now, the majority of the creativity starts in Ethereum and then just copy pasted into these other chains. And maybe these other chains are able to optimize one particular facet of the DeFi economy, but I don't think any of them have the whole package. So Solana, obviously, very good marketing. A lot of the actual applications built on top of it have very, very good UX, like the Phantom Wallet and stuff like that. Very, very energized community, and coming out of the whole SBF, FTX debacle, have sort of like re-energized this chain, and the thing's gone from like $7 now it's close to $100 or whatever it is right now. So it's a great momentum play, and so I jumped on momentum play as a trader and tried to hype it up because that's what I do. But at the end of the day, I bought Sol as a trading vehicle. I'm going to sell it and take the profits and do something else, and maybe I'll rebuy if it corrects down, $40 or $50 again, and ride it up again, because there is a lot of energy there. People really believe in this, and you can't not trade it. I like these sort of things. That's a great thing about crypto. It's so trend momentum focused that if you just buy into that vertical chart, you can make some money. In terms of decentralized compute power, I don't think Ethereum is money, so I know that wrinkles some in the ETH community. I believe that Bitcoin is the only real crypto money. Ethereum is the decentralized computer, and it's a commodity that runs this decentralized computer. And they're two distinct different things. I believe that in 2016, Ethereum community proved that they care about the computer more than they care about money, when after the DAO hack, they rolled back the blockchain to give people back their ETH because they cared more about the computer gaining traction and use case versus ETH being money, which is fine. Choose the vertical that you want to play in. It's fine that it's just a computer and not money. And so that's sort of my market taxology on these sort of things. If that got in the way, if ETH got too expensive and gas fees were too expensive, then they would do something to change that, because they care about usage. And so, yes, it's deflationary right now, but that can change. It was inflationary before, and they changed it to deflationary. So they changed the monetary policy to suit their goals. If they believe that's going to further the use of the computer, that's what the community is going to decide. If it needs to go back to inflationary again at some point in the future, I believe the community will decide to do that because it wants the ETH EVM to be the most used decentralized computer versus being the hardest form of cryptographic money.
The outlook for Bitcoin ETF approval and the changing financial landscape raises questions about market expectations. Anticipated post-ETF price surges may face challenges, as institutional capital inflow dynamics might not align with predictions. The ongoing debate between traditional finance and crypto underscores the need for a paradigm shift. Q4 could be an accumulation phase before a potential 2025 blow-off top, reflecting uncertainties in traditional portfolios. The recognition of crypto as an escape from the traditional system aligns with a potential shift from the 60-40 portfolio. Ethereum's role sparks community discussions, emphasizing its prominence but sparking debates about its nature, money, or a decentralized computer. Navigating this evolving landscape requires investors to align goals with the dynamic crypto market. Whether seeking financial freedom, a store of value, or exposure to new financial systems, careful evaluation is crucial. Stay informed, engage in discussions, and adapt to the changing nature of the crypto and financial world. If you found this insightful, consider subscribing, liking, and sharing your thoughts. Your support helps us continue providing valuable content. Thank you for being part of this journey, and stay tuned for more updates.